think this year's kind of overall recovery, I mean, bulk of our business is in China. And I think the external environment in China is actually quite positive, as I mentioned earlier. I think how strong we'll grow really depends on, I guess, how much consumer confidence. As you know, the market is very much driven by domestic consumption. Our macroeconomics research institute actually interestingly show the 54% of the GDP that's driven by consumption. 30% is really what we would call more hardcore spending, which I think you've seen that fully recovered even before COVID levels. And then there's about 24% then which are more discretionary spending, either on leisure, longer term spending. And I think we're going to try to see more of the consumer confidence pick up, and then you see that going more. So we're very much focused, I think, this year on working together with our customers and the economy with China as we see that the fresh breath there today.
Jessica, what I really want to talk to you about is, I mean, as an insurer, asset liability management, how you manage your assets and cash flow to satisfy obligations is pretty crucial, as well as how you hedge and your risk management. And I bring this up because, in the case of, let's say, Silver Lake, SVB, Silicon Valley Bank, all that money they had in long-term securities, U.S. Treasuries, became a huge problem, right? And similarly, we're watching banks in Japan as well, who have a massive holdings of U.S. Treasuries simply because returns at home, they're basically not getting anything. How much of your assets are in let's say, U.S. Treasuries right now?
I think you're absolutely right. For insurance, for us, asset liability management is most important. It's not just on the returns matching, because we're really managing our policyholders' money, but also the duration matching, right? So I think for us, we have average of 14-year kind of insurance liabilities, and therefore our assets is actually 11 years. We're trying to match that, so we're very different from some of the other profiles of a bank. So both our asset and liability are long dated, and so we've been trying to get that such a duration maps as well. And that way we're less subjected to interest rate fluctuations and stuff. And given that the bulk of our business is in China, our assets are actually predominantly focused in China, and we therefore are about, I think, 80% of the kind of treasury bonds, etc., particularly in China, and then of the other kind of 20%, we're actually diversifying to alternative assets, equities, and etc.